Hi everyone, this is Jason Burack of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He used to live in Europe, but now he's living in the United States, although I'm not sure how much longer after dealing with some of the socialism here, just talking to him here for a little bit before he started recording. It's Tuur Demeester. He's a Bitcoin expert and also an Austrian school economist. Thanks for coming back, Tuur.
Hey, nice to be with you, Jason.
Now, Tuur, we just have so much going on in the world. It seems like a black swan, that most people, even a lot of libertarians and Austrian school economists, didn't foresee a lot of these events, all happening every week or every couple weeks. We've had the oil price drop. We had the Swiss depeg with their euro peg. We had the European Central Bank violate their mandate and start doing a quantitative easing program recently. This all seems to fit into the currency wars type of mentality. Is that what you also see?
Yeah, it's really the ZIRP paradigm. Like once interest rates go to zero, entrepreneurs and basically anyone, bankers, governments, they can borrow for nothing. And so then you see all these bubbles start to occur. And what we saw before the oil price decline was something like silence before the storm. Like we knew it was impossible for the markets to keep rising, and something was going to happen. And it was the oil price first, and then we're seeing financial companies slowly more and more getting into trouble again, and Switzerland becoming aware that the ECB was going to launch another QE program, and so they depegged. So that's basically what you get with these interest rates that are zero, or actually, I mean, we have to be honest, they're negative. Most of these interest rates are the real interest rates are negative. So the money is heating up and it's flowing faster and faster from bubble to bubble, and that's why we get all this volatility. And it's not good for people that are in it. Certainly not for people that are in the financial system with leverage. There are a lot of Swiss franc traders that got burned really badly, also several trading platforms. So yeah, I really think we are seeing the slow death of money, the slow death of the fiat system, and the way we are experiencing it is in the form of a warfare.
Exactly. I would completely agree, whether it's currency wars or financial warfare, where the U.S. basically, even before the oil price started dropping, and you and me could talk about it if you want, how I think there was a lot of market manipulation involved in the oil price drop. I don't think the fundamentals justify, supply and demand fundamentals justify the oil price dropping anywhere near the amount it's dropped. But it looks like the U.S. government wanted to attack the Russian ruble. The Russian ruble was starting to fall drastically before the oil price even dropped. So it looks like warfare has changed from the old battlegrounds and things like that, where armies would line up or use new types of warfare technology with warheads and bombs and things, to cyber warfare, hacking, currency attacks, things like that. And besides this currency wars, where these Keynesian mercantilists are all, they're doing the same type of playbook thing. They're all trying to devalue their currency to boost exports and gain some type of relative edge for their exports, and also, bail out their banks. It just seems that I'm so pissed off at what's going on right now, like the U.S., Japan, the U.S. Federal Reserve, Japan, and the European Central Bank. It seems like, they're talking. They're on the phone, right, doing conference calls to her, and they're saying, you know what, well, you do the QE this month, and we'll take a break. And then, next month, we'll do our QE, and you guys will take a break. And, next month, you other guys can do the QE, and we'll take a break, and we'll just keep doing this and taking turns. And it's becoming incredibly volatile. If you lived in Europe, you grew up in Europe, I can imagine with these currency fluctuations, if you're a businessman, right, whether you're a Swiss businessman or you're operating in the Eurozone, these currencies fluctuating up and down like this, it's got to make your life a living hell.
Yeah, I mean, like for me personally, I haven't suffered that much because I've been mainly invested in cryptocurrencies and precious metals. But yeah, absolutely, it's a problem. And if you look into the history of Latin America, where they had massive volatility in the past, there's a little book. I forget the title now. It's a little book about, I think it's How to Survive Hyperinflation, something like that. But it's unique in that the authors traveled to Latin America and they interviewed businessmen and bankers that were working in the hyperinflationary times of the 80s. And what came out of that, out of their research, is that in times of volatility, cash flow management is crucial. There are companies that actually made more money by intelligently managing their cash flows than they did by their core business, by whatever they were producing. And
yeah, that happened. Have you read about the Weimar hyperinflation too? That happened there too.
Oh yeah, totally. Like, I mean, there's stories there of a farmer. I don't remember how big the flock was that he bought. I think it was like 300 animals. So he borrowed money and he bought like 300 cows. And then the inflation was so strong that a couple months later he could repay his entire loan by just selling one cow. So things like that actually happen in those times. I think today, with a more what should I say, a more beefy bureaucracy, I do think we will see small print in mortgage contracts that will make it harder for individuals to profit of inflation ahead if you have a fixed interest rate. But
yeah, they did.
Sorry?
Didn't they do that in Argentina, right? They had that small print that you said, right? Because the Argentinians, during, I think, one of their other hyperinflations in the late 90s, they tried to do what you just said, right? Because they tried to become currency speculators, and for a while they were making money, and then, they took out larger and larger loans in the Argentinian peso, expecting it to be inflated away, and then there was small print in there saying that they couldn't pay back any of their loans in the old, hyperinflated currency.
Exactly.
They had to pay it back in something else.
Exactly. So they were squeezed on both sides. On the side of deposits, they were faced with their money being stuck in the bank with the corralito money, the bank holiday basically, and that money was inflated away. But then on the side of their liabilities, of their debts, all of a sudden they had to pay that back in hard currency. So I think the lesson is, if you stay in the system with too much of your assets, then you get burned. It's really dangerous.
Yeah, I agree, and we're starting to see in the U.S. too. I don't know about other countries. I follow the U.S. more, but you're starting to see different versions of capital controls, whether it's FACTA, Foreign Account Tax Compliance Act, or different types of things, where as a U.S. citizen, even if you live outside the country, you have to report a lot of your bank accounts and investments and things like that for the IRS, so they can keep track of you and see, how much money you're trying to move offshore, et cetera, et cetera.
Yeah, like if you're an American citizen and you make a mistake and you send money to a non-FATCA compliant bank abroad, you immediately lose 30% of the value that you sent. So if you send $1 million to the wrong bank, the bank that will send the money to the other bank is automatically going to send $300,000 to the IRS. So that's the kind of legislation we're faced with. So yeah, capital controls are real, and it's not just the U.S. I mean, we're seeing it all across the board. And this is just, governments panicking that their tax base is eroding, and they're trying to ring fence their economies to keep the wealth that is still there, to keep it in, so that they can tax it gradually going forward.
Yeah, and I think that's also why governments are trying to go to more of a cashless society. You're from Europe. One of the things I've heard about Europe is Europe just has an enormous underground economy where there would be a lot of people paid in cash off the books, to get around that enormous VAT tax, value-added tax that they had, and the income taxes and other taxes were just there were so many of them in Europe because Europe has had socialism for so much longer, even before World War II started, but especially afterwards. A lot of the policies that were put in place were just very difficult to start a business in Europe. I've heard horror stories from people in different countries in Europe. It's tough getting a website up. Sometimes it takes a year or more to get approval for a business license. Some of the fees to even get started on a business in Europe is difficult. It's
pretty diverse, the landscape in Europe. There are countries that are very, very cashless, like Sweden. Everything there is almost electronic. And I think it's no coincidence that the countries that are the most cashless are the ones that have not really suffered a major crisis in a long time. Like Sweden and Norway, they're just leveraged to the hilt. If you look at household debt, for example, I think it's 250% of GDP. So, but other places, that's true. There is more cash going around, especially once you move to Eastern Europe. The 500 euro bills are ubiquitous. A lot of the houses in Spain, for example, on the coast, is what I heard when I was doing research there, is paid with money that euros that are transported to North Africa and then re-imported as cash into Spain, often coming from Eastern Europe. So those kind of things, they happen. But then again, there's a lot of borders inside Europe, so we hear these stories of Italians trying to deposit gold in Swiss banks, and then they get caught at the border. So yeah, it is a headache. If you have a lot of cash, it's a headache because obviously you know that inflation is coming. The euro has declined by more than 15% against the dollar. So if you were in cash euros, you didn't do so well.
Yeah, and from our listeners in Europe, they tell me their bills haven't dropped. So Europe is supposedly stuck in horrible deflation, but yet, the cost for a lot of everyday items continue to rise. And I think that's why, gold and silver are now, it looks like to me that, this artificial manipulated cyclical bear market that was from 2011 to 2014, that looks over. And gold now is making, really good price appreciation in almost every currency, basically, except for the dollar.
Yeah, I agree. I think gold is on the in Europe at least, or in the West, is being now rediscovered. It was in the dumps for 2-3 years, but now it's being rediscovered, and I think justifiably so. And especially if you think that in combination with cryptocurrencies, you really give gold wings, because using cryptocurrencies you can move gold around the world without having to physically transport it. You can just sell it, go into cryptocurrency for a little while, and then rebuy it somewhere else. And I think that really empowers gold holders to a great extent.
Yeah, I agree. I think cryptocurrencies, I don't own any Bitcoin right now currently, but I still enjoy doing the research. I read Dominic Frisby's book on Bitcoin. I've been reading up a lot on Bitcoin. Every week at least I try to read 1 or 2 Bitcoin articles. But when I look at the headlines, I was telling you about this before we started recording. I just Googled Bitcoin news, and almost all the news stories, Tuur, that I see, maybe it's because the mainstream media, the mainstream financial media, they're trend traders and chasers. They only look at the price action, see it's down, or maybe they're hardcore big government apologists and they're in favor of central planning and things like that, and maybe they just hated Bitcoin to begin with. But some of the headlines are, from Quartz, I'm reading right off here, Bitcoin libertarians now desperately need the government's help. There was another humongous smash piece from the Washington Post from one of their hardcore Democratic writers there, and we're seeing from Forbes why Apple Pay and dollars are killing Bitcoin. I could go down the list here. The majority of articles that are coming out are just extremely, negative sentiment-wise, and borderline vitriolic about Bitcoin. Do you think that's mostly just because of the price action in Bitcoin, or do you think it's something else?
Yeah, like if people are interested to read more obituaries, go to bitcoinobituaries.com. And there you can see that Bitcoin has already died 40 times in the span of its existence, and the articles go back to 2010. And yeah, January 17, is this the end for Bitcoin? Headline. USA Today, Bitcoin is headed to the ash heap. The Telegraph, January 15, this is this year, Bitcoin might be dead. It does not matter. So yeah, absolutely, the sentiment is very negative. But then it's quite amusing to me, because when you look at what's happening on the ground, if you look under the hood, it's amazing. Little people know about this, but Coinbase, one of the bigger Bitcoin companies, they raised $75 million just on January 20th, and guess who invested? So $75 million. Companies that invested are the New York Stock Exchange, USAA, BBVA, which is the second largest bank in Spain, Docomo, which is the second largest mobile phone provider in Japan, and then a whole bunch of ex-CEOs, the ex-CEO of Reuters, the ex-CEO of Citibank. These people were all included in this funding round in this so-called dying payment network. So it's quite amusing to.
That's incredible validation and credibility there. These guys are not what you and me would consider, Austrian school libertarian types. I can imagine maybe they're definitely capitalists, but they're probably more in favor of big government. They're kind of those Republican neocon types there who view maybe they'll agree with us on economic issues, but they wouldn't agree with us on civil liberties and foreign policies and things like that. But a company like USAA, which is a very conservative bank, I think almost all of its members are military, right?
Yeah.
Normally you would think that they wouldn't be involved in this. I mean, doesn't the banking system hate Bitcoin? I think, or that's the type of narrative that the mainstream media has tried to portray.
Yeah, I mean, it's just not. I mean, if you're in it, you know. Like when I was younger, I was working in a company that sold mattresses and beds, and in the beginning they explained to me what I had to say to the customers, and in the beginning I thought it was true, so I was like telling people like, oh, this is how this bed works, and this is how long it'll last you, and this is why it's good, and then like after about a month I started asking more questions, and the store owner actually started telling me the truth about what was going on and about how these beds were usually broken in about 1 or 2 months. And when I asked him about his favorite bed, his favorite mattress, it was somewhere in the dark corner of the store because the profit margin on that bed was a lot lower. So that's the way it works in the banking system as well. Like the people that work on the inside, they know that it's unsustainable, and so they know that if they put a little bit of money into new technologies, then maybe they can take the elevator up as their own as the financial system further erodes. I imagine these people don't see like a big collapse, and I don't think it's likely to happen because we have all these Financial Stability Board, IMF. All these international institutions that are focused on saving what's called the G-SIBs, the largest financial too big to fail institutions. But still, I mean, I think they have some sense of that a new wind is blowing and it's necessary to get on board. And I think they were right to make this investment.
Yeah, and most of these guys on Wall Street Tour are very hypocritical. I know some of them, friends of friends, tell me things. I have a good contacts list now of people that are either still working on Wall Street or have worked down there for a while, and I do hear things from time to time. But what I heard last year is that while in public people were still bashing gold and the chart looked bad, a lot of value investors and also floor traders at different exchanges were starting to say, you know what, the stock market is just getting ridiculous. Even on bad news, the regular stock market's going up. They started buying a lot of physical gold and silver.
Right.
They knew they would admit, off the record when they weren't being interviewed by CNBC and Bloomberg that gold and silver, the paper prices were manipulated. They wouldn't admit that in public, though. And, maybe they were shorting the paper. If they were a trader, they were shorting the paper price of gold and silver, and then they were buying physical metal with the profits. So it was no surprise to me that eventually gold and silver were going to go back up for a whole bunch of different reasons. But I mean, these guys just have enormous hypocritical behavior. I think J.P. Morgan now is one of the largest shareholders of the Sprott Physical Gold Trust and the Sprott Physical Silver Trust, and also the Central Fund of Canada. So they're looking to get access, to physical metals because they know the stuff we've said about, the gold and silver market manipulation. And I have no doubt that they're going to hedge their bets, at least at the very minimum, and they're going to be investing in cryptocurrencies because, despite what the mainstream media and mainstream financial media are saying these headlines about the Bitcoin price, and yes, the Bitcoin price has dropped. Yes, I guess there was some security issues, I guess, at one of the larger exchanges. Maybe you can talk more about that in a couple minutes here, but on the other hand, though, look at all the investments that are going in, and it's not just these mainstream types. Silicon Valley, and not everyone on Silicon Valley, who's a tech entrepreneur is a libertarian. In fact, most aren't. Most, I think, are actually Democrats who feel guilty about making money because, that's just the nature of the San Francisco area if you've been up there. And most of the guys are not Republican. They're just rich Democrats. But anyway, though, these guys, they're looking at the technology. They're not attaching anything political to the technology, and they just see that this blockchain technology, it solved, the Byzantine generals problem, which I think has been around as long as computers and the internet have been around, and they're like, well, imagine all the possibilities and all the disruptions it can cause in all these different industries.
Yeah, it's like even if you just dip your toe in it, just 0.5% or 1% of your financial assets, it's a fantastic insurance policy in case something big goes wrong. because it's completely independent. It operates totally independently from any existing financial system, and it's like a fire insurance. You don't expect your own house to set ablaze tomorrow, but you do have insurance against I don't know how you call it actually. Is fire the word? Is it arson? I don't know. But yeah, those kind of things. Sorry.
It's fire insurance, but if it is arson, then the police get involved in things like that. So it's just fire insurance.
Well, yeah, and I don't know what's going to happen to the financial system, if it's just going to be fire or if it's going to be arson, but the risk is definitely there. So it just makes, if you look at the potential upside, it's just ludicrous. I mean, we're looking at prices that are almost back to the lows of 2013, and the upside potential is, well, I mean, I don't hesitate to name like $10,000, $100,000. It's absolutely possible for one Bitcoin to head in that direction once this shit starts hitting the fan.
Yeah, and there was a whole bunch, and I think this accurately describes human nature, whether it's stocks or Bitcoin or other types of investment markets. People just don't like buying stocks or other investments when they go on sale. You know, when a stock or a market or something like Bitcoin was in an uptrend and people could look on the charts and it dropped a little bit, there were tons of people willing to buy on the dips, right? Saying, oh, I wish it goes back down to X amount of price, right? Name a support level, right? And, then I'm going to back up the truck. And, now that Bitcoin has blown through those support levels, and now it's, I don't know the exact price. What's it at right now, 180 or something?
It's a little bit higher. Yeah, it's at 230.
Okay. It's a very volatile instrument. It's very volatile prices for Bitcoin, but I doubt a lot of people are buying. But if you're looking long term, I don't think investing in actual Bitcoins is an investment. I think it's more of a speculation at this stage because Bitcoin has more to establish itself as a global currency. I mean, eventually maybe it will. It does have the technological advantages of a lot of other things. But I'm just really excited, Tuur, about the blockchain technology and some of the other disruptions that can come along where it's going to make our lives a lot more productive. It's going to lower costs for a lot of things. Maybe you could talk about that now.
Yeah, totally. I mean, the advantages are just, I mean, first of all, financial privacy. Second of all, I mean, financial privacy is not a given in blockchain technology, but it's definitely achievable quite easily. To an extent that actually has never been possible before. Also, how to store your bitcoins in a way that they are unconfiscatable. This is the first time that you can actually store your wealth spread over several nations, and you make a key that's maybe 3 out of 5. So you need 3 keys out of a total of 5 to unlock your bitcoins. So if 2 countries out of the 5 where you store your bitcoins, they go crazy, or there's some kind of difficulty to get to the vaults, then you can still go to the 3 remaining countries. And so that way, it's also very vague then, like, well, where are you actually storing your wealth? If there's capital gains taxes or those kind of things, to which government do you owe money? And that, of course, is a headache for lawyers, but it's a fantastic thing for cryptocurrency entrepreneurs to market this to people who want to stay safe. If you look at the other advantages of Bitcoin, you're talking about irreversible transactions, for example, which is very, very safe in an internet environment, in an environment where you're going to make sales to people in countries on the other side of the world. You only transactions irreversible mean that as a merchant, first you get paid, the transaction cannot be withdrawn again by the person who paid you, and then you send the item. So it's up to the merchant to build up this credibility so that people trust him with their money. And that's the exact opposite of what happens today, which is that merchants are at the mercy of the customers. If the customers, for some reason, complain, usually the merchants have to give back the money, even though they've sent the item in the mail. Looking at remittance, for example, the world remittance market is huge. People working abroad sending money back home. Bitcoin solves a lot of that and makes it a lot cheaper. If you think of Western Union, for example, the fees there are between somewhere between 7 and 20% per transaction. That's kind of what you're dealing with if you live and work abroad. So Bitcoin can drastically reduce that rate. Also, when you look at just the ledger technology, being able to keep a public record of assets in a network, this drastically reduces the costs for registering property, for example, registering real estate in the future, or a will, or shares in a company, or commodity contracts, or you name it. So this technology is really incredibly powerful. And of course, it takes away power from people who like to be at the helm of things, who like monopolies, but to the benefit of the population at large. So these are just a few. I mean, there's more, but these are just a few of the main breakthroughs that Bitcoin allows for. Also, like tipping, micropayments. You can pay somebody just 5 cents or half a dollar or $3 if you like his work, and you're not facing 5, 6, 7% of that money that's going to go to PayPal. It's a one-click payment. So these are all breakthroughs that are going to change the internet and people's everyday lives quite dramatically.
Yeah, there's so much excitement in Silicon Valley over Bitcoin and the blockchain technology. Not necessarily the Bitcoin price tour, but of all these, you gave some examples of some of the things. But I think there's so much capital from Silicon Valley still pouring into blockchain technology companies. There's a lot of very smart computer programmers and computer scientists from all over the globe, and I think they're not going into, making dating apps as much in the past as they were and things like that. They're now, most of these really hardworking, talented computer programmers are now going into the blockchain technology types of companies, looking to disrupt different industries with what, legendary technology investor Mark Andreessen, who's still a big proponent of Bitcoin. Our listeners can go check out his Twitter feed. He routinely defends his investments in Bitcoin. It just appears that Silicon Valley is still committed to this project, and yes, maybe it'll take another 5 or 10 years before we see blockchain technology companies on exchanges and they're more mainstream, but it was kind of, it seems Bitcoin and a lot of the blockchain technologies are very similar to what the internet companies were maybe in the mid to late 90s, just as one or two companies was starting to get profitable or very close to going IPO on exchanges.
Yeah, I would say we're probably at the internet equivalent of 1993, 1994. I don't think we're at 1995 yet, because that was Windows 95. That was millions of people connecting to the internet. We're not there yet. The Bitcoin owners, maybe that's between 2 to 4 million today, I would say, something like that, people that actually own Bitcoin. So that's very small. And also if you look at the total revenues generated by the Bitcoin economy, back in 95, it was about the equivalent of $5 billion. I think we're not there yet. We're maybe at 1 or 2 billion. So, but we are inching towards that. I do think the ecosystem is a bit overstretched. A lot of money went into these companies, but volumes have been pretty low, especially in terms of dollars. So they're not, and also there's a lot of those companies, so they're all competing for market share, and they're burning their VC cash to do that. So it's very competitive, and I do think we're going to see consolidation. The Bitcoin mining space is already consolidating, but in terms of like companies being bought and sold on public or traditional stock markets, I think we are going to start seeing that in 2015. Maybe we'll see, I expect at least 3 to 5 companies to IPO in 2015, if not more. So that's definitely down the pipeline. I do think it's a bit risky at this point to get involved in the companies. I think buying Bitcoins outright is the way to go right now, especially now that we've declined 80% in price since last December.
Now, for listeners out there, there was a hack, I think, at Bitstamp, which was one of the 2 or 3 largest Bitcoin exchanges in the world. Which Bitcoin exchanges and wallets do you think are safe, given what's happened in the past at Mt. Gox and at Bitstamp and some of these other hacks where people have lost their coins?
Yeah, I remember meeting the Bitstamp guys at a conference early 2012. They had just launched their platform and basically competing with the only other real player, which was Mt. Gox. And they were really young. I don't think they even got out of college, early 20s. And Nate, his brother, was a security guy. And so that's why they were, I think that contributed to them being one of the better exchanges. But it's possible that they became complacent over time because, business was going well, and their procedures might have been, probably they were pretty good, but maybe not world class. And so they lost 18,000 bitcoins, which I don't know, that number maybe doesn't speak a lot, but it was about $5 million when it happened. And that represented 9% of customer deposits, at least according to my calculations. They didn't give out recent numbers, so I based myself on numbers that were about 9 months old. But still, 9% is really huge, even if it was only 5%, because it's not their money, it's their customers' money. And I have not seen it confirmed in writing, but I've heard of several people that they've repurchased the bitcoins with I think they had an investment round of $20 million, so they used that money to rebuy the coins and to get back to 100%. But the lesson from this is don't let your bitcoins sit in an exchange. Only hold small amounts in exchanges. They're not specialized in storing bitcoins necessarily. They're specialized in trading. But that said, platforms that I think are secure is Kraken.com. They've been assigned with redistributing 200,000 bitcoins from the bust Mt. Gox exchange. I think Coinbase is probably doing a good job as well. They have a multi-sig wallet, so you can hold the keys yourself. So that means that Coinbase can actually not access your coins. I think Blockchain.com used to be popular, but I'm a little bit worried at how their product development is coming along. There are some problems in the company, I believe. And as far as a Bitcoin bank, I personally have some coins in Xapo, XAPO.com. They have some people that own a lot of coins, and I'm talking 10, 50, 100,000 coins as their customers, and they are fully insured against theft. So I think that's a good place to start. And then as far as storing your bitcoins in your own under your own control, I recommend looking into Bitcoin Trezor, Trezor.com. Trezor is a device. It's called a hardware wallet, and it allows you to store your bitcoins offline, but still manage them actively in an easy way.
That's very good stuff. I think our listeners should definitely look into that. And as a value investor or contrarian, it's very difficult to value, Bitcoin in quotes, right? Because, it doesn't have dividends, it doesn't have discounted cash flows or anything like that. But anything that's this far down, it's dropped in price, it interests me at least as a speculation, as a contrarian.
Yeah. Have a look at the charts and have a look at what happened in 2013. We saw the price hover around $100 for over 6 months. And then after that, we saw the big rally to 1,163. So I'm quite confident that is a pretty solid bottom. So that means from now, the downside risk is about 50%, which I think is for value investors, especially in a startup technology like this, is actually quite limited. If you look at Bill Miller of Mason Capital, he invested when Mt. Gox went bust last year, and his price was between $400 and $500. That's when Bill Miller, I don't know if you're familiar with him, he's one of the great value investors. He lost a lot of money and some of his luster in 2008 with the crash, but before that he had some of the best returns in the sector over a very long period of time.
He was the only mutual fund manager, I think, in history to have 15 straight years of beating the S&P 500, I think.
Yeah, I believe that's true. So he invested in Bitcoin. Also, Li Ka-shing, the richest man in Asia, has invested in Bitcoin. I mean, it's just also the owner of the Dish Network. This is something that hasn't been in the news, but I know that he's been personally investing. Also, his net worth is about I think between $5 and $10 billion.
Yeah, I had Patrick Byrne on a number of months ago too, and I think he's paying his employees now in Bitcoin, and he's planning. I think he's invested in Counterparty, right, which is going to attempting to move some of these exchanges, get away from the Wall Street corruption and move the holding of these assets and some types of trading vehicles onto the blockchain technology.
Yes, there are all kinds of really exciting things happening. I'm myself. Let's see. Yeah, that's actually in a good week from now. I'm traveling to the Caribbean, Punta Cana. There's an event called Satoshi Roundtable, and it's just 50 people, and there's going to be several people who are working on sidechains technology and other cutting edge things there. So I'm really looking forward to picking their brains on what's coming out next. I've been a little bit out of it, but I'm coming back into it with full speed. I mean, out of the event circuit for the past 6 months, I haven't done a lot of conferences.
Yeah, I'm just to add to some of the big names that we've mentioned. Patrick Byrne, CEO Overstock, and so many others. This BitGold announcement that just came out recently this week too. They're planning on going IPO on the Toronto Exchange in the near future, and they have investments from Nolan Watson of Sandstorm Gold. They have investments from George Soros' sons. They have investments recently too from Eric Sprott and his firm. So these are big name people that are getting involved. I think BitGold is a little bit different type of concept than Bitcoin. Rather than just a cryptocurrency, it's a cryptocurrency that's going to be backed by physical gold and a vault. I guess the vault's going to be in Canada, but if our listeners want more information on that, they can go to the BitGold website and they can put in their email address. And I think BitGold's offering $20 worth of free gold for your email address, so you can learn more about their new type of gold-backed cryptocurrency. So, I obviously I think that was smart for them not to not to list in the United States and not to put the vault in the United States. But we'll see if the government regulators and all those guys try to go after that company.
It's really exciting to see the marriage of a 6-year-old currency with a 6,000-year-old currency like that. It's just really exciting, and it really shows that we haven't seen anything yet in terms of private currencies. I think 20th century was the century of fiat currency. I think the 21st century is really going to be the age of private currencies, and it's going to liberate the world economy to no end. It's just we can't even imagine how the world is going to change.
And it's going to stop inflation, and hopefully it'll cut back on central planning and the welfare warfare state, and some of these Marxists that think that they can just keep increasing taxes on everything, on everyone's bills, and redistribute all of our wealth that you and me work hard for to try to help society out by creating win-win scenarios and new products and services and things like that.
I completely agree. It is going to be a rocky ride though. It's going to be like stomach churning. And that's why I always recommend if people do look at investing in Bitcoin, cryptocurrencies, limit your exposure. Go for somewhere between 1% and 10% of your financial assets, just so you can sleep at night. Because the volatility is and just like with any startup phenomenon, I bet the early days of Microsoft as a company, I bet the stock was also very volatile. But then again, the opportunity with Bitcoin is that you're invested in something real. And as opposed to the Enron of the financial system.
Yeah, and Bitcoin also has, a strict amount of limit basically on the total number of coins, unlike dollars or euros or yen or Chinese RMB or any of these other national government-issued fiat currencies that, the central bankers can just decide, there's not enough credit growth, this is deflation, even though they're creating enormous asset bubbles, right, which I think is just ridiculous how they don't count asset price bubbles as inflation, and, just create more currency units. In terms of hedging any Bitcoin exposure, with maybe some hedges and things like that. Is there any type of hedge products? Is the Winklevoss Bitcoin ETF, is that going to be available soon from the mainstream maybe for people who don't want to buy Bitcoin outright, who just want to buy maybe the ETF, or maybe they've bought Bitcoin then, but they want to hedge the volatility with some puts on the Winklevoss Bitcoin ETF?
Yeah, there's some rumors that it would be launched somewhere in the next 4 or 5 weeks, but those are just rumors. I haven't heard it from anybody in my network that I think has credibility. I do think with the New York Stock Exchange directly invested in one of the big Bitcoin companies, we are going to see some Bitcoin-backed financial product in the markets pretty soon, in the traditional markets. I think that's definitely going to happen in 2015.
You think maybe Coinbase and BitPay will be the first couple companies to go IPO in the near future?
I heard rumors of a Bitfury IPO, which is the biggest mining company. So I have not heard rumors of BitPay themselves. I think like for BitPay and Coinbase, like BitPay, for example, they have a lot of merchants signed up, but their actual numbers are not spectacular, and these numbers are not public, so this is just hearsay, but it makes sense. I mean, the Bitcoin price going down, Bitcoin is in the first place a safe haven, I believe, so people are not, they don't buy Bitcoins because they can spend them, even though a lot of people say that they do, and so I think putting BitPay, for example, on a publicly traded exchange will probably make for a somewhat disappointing valuation. I think they want to wait until things are a bit more mainstream to really get the most out of their IPO.
Do you think like a company like Apple is trying to, with their Apple Pay, they're trying to like copy some of the success of Bitcoin, or do you think it's not going to stop, the Apple Pay is not really going to stop Bitcoin too much then?
Yeah, no, totally not. It's just, it's just an exponent of traditional banking. It might be a little bit more efficient, but I mean, this is just, it's just, blowing against the storm when, once we're starting to see more and more capital controls, people's money being stuck in a bank, once we start seeing more bankruptcies again in the financial system, Apple Pay is not going to, it's not going to lure people towards the dollar, or it's not going to lure people away from Bitcoin and things. I think it's trivial in the big picture.
Yeah, so I think the mainstream media is just trying to put out headlines like that because the Bitcoin price has gone down, and just because the Bitcoin price has gone down, they're trying to attribute some of that reason, I guess, maybe to Apple Pay or things like that. Whereas, I don't think the Apple Pay stuff has much of anything to do with the Bitcoin price going down.
I mean, tell that to a Russian, talk to a Russian and tell him, oh, do you think Apple Pay and the dollar is killing Bitcoin? He'll say, what? I don't know. I don't even know how easy it is for Russians these days to access dollars. I do know that they're buying Toyotas like crazy because they want some hedge against the inflation. They're buying Toyotas. They're actually buying iPhones because the iPhones keep their value better than the ruble does. So yeah, I mean, these stories maybe make sense inside of America, but once you go outside of that, we're just seeing. I can send you a chart that I made, a world map, where you see dollar expressed inflation. It's hideous. I mean, 10% per year expressed in dollars. Let me actually take the map and name some countries. So over a period of 24 months, we have seen more than 20% US dollar inflation in Indonesia, Australia, Argentina, Chile, Brazil, Colombia, Venezuela, South Africa, Russia, Iran, Turkey, all these countries. So, I mean, they're not going to be convinced that their local currency is the place to be because Apple Pay is. So anyway, these are just local stories that are nice but don't really mean much, I think.
Yeah, and those currencies, especially Russia, I mean, the U.S. government and I think Wall Street were involved in, part of the military financial warfare attacking the currency. So I think Bitcoin, besides just gold and silver are doing well in those currencies, but you don't know how the governments are going to react to potential taxing of gold and silver. So I think Bitcoin offers those citizens an interesting alternative then to holding fiat currency, and probably over a 10-year period, there's going to be survivors in digital currency. Obviously, I think Bitcoin's in the lead right now, but who knows which ones are going to be in the lead 10 years from now if there's a more advanced one that comes out. But I think these things are probably going to hold their value over the long term, probably better than most debt-based fiat currency, because the goals of these the people in power is to make sure that the currencies don't hold any value. Well, my final question for you, Tuur, is it's also ripped from the headlines about Bitcoin. You know, we've just seen we have the trial right now with Ross Ulbricht for Silk Road. He's being allegedly the Dread Pirate Roberts. We have the sentence that was handed down to Charlie Shrem, where I don't think he knew who he sold his Bitcoins to, right? And yet he's been, I think, given a 2-year sentence for money laundering, right? He just sold his Bitcoins into the exchange, and the government saying he should have known, since he has a Bitcoin company, who bought his coins and what they use them for. Do you think then that like the U.S. government and maybe some of these like crazy progressive states where there's a lot of rules and regulations like New York are going to start trying to increasingly clamp down on the owners of Bitcoin businesses and digital currency businesses and trying to like imprison these guys or shut the businesses down?
Well, I think in general, local governments will be and small governments will be more friendly towards Bitcoin, such as what was it again? The Seychelles. One of these tax havens already opened their doors wide for Bitcoin recently. So smaller local governments are going to embrace Bitcoins, and federal governments maybe because they control the money supply, they have a vested interest in the fiat money more than the local governments have. They will be more hostile, and so I think it's going to be there's going to be a lot of gray areas. It's going to be unclear for a long time what's really going on. And meanwhile, I think the gray market or the black market or the blue market, like they call it in Argentina, is going to keep growing because people are just going to keep doing their thing. The dark markets, such as the Silk Road, is one of the first dark markets. It is going to, I believe, be one of the most significant phenomena going forward. We're going to see this flourish, these kind of underground marketplaces, because they're going to become more and more decentralized. And I mean, if you look on a global scale, the black market is already about 20% to 30% of global GDP. So once that gets transported to the cloud, it can really make a big impact, especially in the context of capital controls. So that would be my thoughts about that. It's going to be unclear, especially in the U.S. It's a huge country, lots of government agencies, and they have conflicting interests. So yeah, I don't see much. Although like what we've seen so far, it's been pretty good. It's been pretty clear. There's some clear legislation. Bitcoin is considered to be property from a legal perspective. So for accountants, things are actually pretty straightforward.
Yeah, we're also starting to see, especially here in the U.S., more marijuana legalization, the war on drugs. It didn't work. We spent all this money. We basically made the black market even more powerful. We created the U.S. government either unintentionally or intentionally created drug cartels, right, who can make enormous profit selling marijuana and things like that. And as more Americans vote to legalize marijuana, they're going to want to buy marijuana efficiently online maybe and safer. And, Bitcoin and the Silk Road and those types of things, they allowed people to do that where, they weren't risking getting held up at gunpoint to buy some marijuana or things like that. So maybe Bitcoin fits into that. That's like more of a libertarian civil liberty type of issue there with personal freedoms and things. But, maybe Bitcoin will help where people who do want to buy marijuana, because whether or not you outlaw marijuana or not, people are still going to want to buy it. So maybe it makes it safer for them, and people are not getting killed trying to buy drugs. They're not getting murdered, and then the drug cartels, which murder people and do all these types of things, then because they don't have access to court system or anything like that to get their money back or anything, then maybe then that'll reduce their power and or eliminate them, like it did after the U.S. Eliminated prohibition of alcohol.
Yeah, I mean, imagine, like, I think the drug cartels should be worried because imagine, so we have people that are able to produce these drugs locally. We have drone technology that's improving pretty rapidly. We have battery technology that's going to enhance the what's it called, the reach of these drones. We have decentralized networks that make payments possible in an anonymous way, and before you know it, there'll be a network of drone-delivered drugs or whatever other substances might be wanted in the market, and these violent drug gangs who profit from the sale of drugs in the streets, all of a sudden, I mean, what can they do? Maybe they're going to have to be more customer friendly.
They would have to go legitimate, right? They'd have to operate like a real business with like financial statements and free cash flow and have normal bank accounts and things like that, right?
Yeah, or just open up shop in the dark markets, but that means that they're subject to market forces and they need to build up a good reputation based on what they do, on the quality rather than the size of their guns.
Yeah, I completely agree. The world that we're seeing, with new technologies like Bitcoin and the blockchain technology, 3D printing, new biotechnology, all these new types of technologies, and then, people waking up and people at least here in the United States starting to wake up that a lot of the rules and regulations are bullshit. I think, outside of the big government trying to maintain the status quo, Wall Street and some of these large corporations and special interest groups trying to maintain the status quo, there's a really nice grassroots effort tour starting to take hold here. It started off at a really small amount of people, just a really small herd of cats and libertarians, right? And now, it's starting to go more mainstream, at least, because there's a lot of people who like marijuana here in the United States who are not libertarian, and through the marijuana issue, they're starting to wake up like, oh, hey, wait a second. They've seen the stuff that's come out with Edward Snowden that he's released, and they're like, well, I don't want all my text messages saved and all my Facebook posts saved and all these other things saved. This is just not right. So, we're starting to go more mainstream here with the stuff. I just want to thank you again for your time. You don't have – I really enjoyed this discussion. Now, you don't have your Bitcoin newsletter. It's not up and running yet. So if our listeners want to be notified of when your newsletter is ready to go, how can they do so?
So they can just subscribe on Twitter. I have a pretty popular Twitter account at Tuur Demeester, TURDEMEESTER. Just search for me on Twitter. And if you go to my personal website, tuurdemeester.com, you can give your email address, and I'll let you know when the newsletter is out.
Okay, great. Well, thank you again for your time, Tuur. I really enjoyed speaking about Austrian School Economics and Bitcoin with you, and hopefully we can have you on again soon, and maybe there'll be some more positive news on Bitcoin instead of these kind of ridiculous headlines here talking about Bitcoin's death and how anyone buying Bitcoin is like this evil white libertarian who hates the world and things like that.
Yeah, that's how I love this kind of news, because then as a contrarian that it's time to buy. So, but yeah, I definitely expect better news articles in a couple months.